All right, we are live. Hello, everybody. It's good to be here. It is good to be here. Happy Friday. We'll make sure that everything is working and coming through over on Facebook. If you are seeing us live, drop a comment. Let me know where you're tuning in from. And if you're watching the live stream here on StreamYard, it's good to have you on here as well. I am excited today for many different reasons. First of all, it's Good Friday. And, I just want to take a quick moment. And before we dive in, I want to acknowledge the significance of today. Good Friday is a powerful reminder of sacrifice, of purpose, and grace. And whether you observe it spiritually or not, it's a day that really invites reflection. And for me, it's a moment to slow down and to just express gratitude and to stay grounded in what truly matters, which is, for me, family, faith, and being part of something bigger than ourselves. So first of all, thank you for carving out a few minutes to be here today. And I promise to keep it brief, but I think you're going to be really glad that you showed up today. For those of you that are crypto enthusiasts, today we've got a great topic that we're going to be talking about, which is how to spot a good cryptocurrency project. More specifically, what are the 5 keys? What are the things that, if you really are evaluating a project, what are the things that are most important when it comes to a successful long-term project? Because let's face it, this industry has been full of, rug pulls and pump and dumps and misrepresentation. And right now there's this huge shift that's happening. And it's an exciting time to be involved in cryptocurrency because we're moving from that place of hype and speculation to tangibility and substance. And so, as the cryptocurrency industry and blockchain is now being validated at the highest levels, from the top all the way down, from our administration and the media. Since the beginning of this year, cryptocurrency has been in the headlines literally over 12,000 times since January 1st. And so we're finally seeing crypto innovation coming back. We're finally getting the clarity and the framework that was needed. And that's an exciting thing for us. So today, I want to help you to understand, how do you separate the majority of the meme coins and the pump and dumps and the rug pulls with a legitimate, long-term, lasting project that has tremendous potential. And this is where you really stop throwing darts in the dark, and you start thinking like well-informed investors, right? And that's the key here. So first and foremost, I learned a long time ago. I've been involved with cryptocurrency since 2016. Started mining Ethereum back in 2016. Those first few years, I was chasing the hype. I was chasing whatever coin was in the media. You'd hear about somebody that struck a gold mine by getting involved in a meme coin. But I can tell you, for every one person that you've heard that did well in memes, there was probably another 99 that lost money. But that one story would create that hope that you could get involved at just the right time and time a coin perfectly, and ultimately it would shoot to the moon. And so, I aligned with a mentor a few years later that taught me some fundamental principles about evaluating cryptocurrency projects. And I'm going to share those with you today. They've made a significant difference and ultimately has now shaped and been a part of shaping what we are building right now, which is the Trusted Smart Chain, which is a blockchain, a layer 1 blockchain that provides a global framework for the tokenization of real world assets, which is an exploding sector within the blockchain community right now. But the word that I want you to think of is Spark. I want you to write that down as an acronym. It's Spark, SPARK. And we'll talk about each one of these a little bit more individually. I may pull up some slides along the way. Bear with me. This is one of the first times that I'm utilizing this new platform for live streams, so it may take me a minute to figure out how to share all of the different images that I want to share today. But first of all, when we talk about Spark, the S in Spark stands for skip the hype. There's so much hype that's out there, and you never want to chase the headlines. Real value always lives under the surface. And while everybody else is chasing whatever coin is in the media, whether it's XRP or Bitcoin or whatever the latest moon coin was at that time, Smart money is looking at the infrastructure, and they're really looking for that tangibility. They're looking for that true real world utility. And so anytime that there's a project that's coming out where you start seeing a lot of hype, oh, get involved now, you can make X amount of, 3% per day, or, you're going to make a fortune in a short period of time. And you start to see that hype. I'm going to encourage you to start putting those yellow and red flags up, because usually those stories don't end well. Avoid the hype at all cost. The second thing that I would say is when it comes to Spark, the P stands for purpose. What problem does this project solve? What problem does this token serve? Is it actually useful? A large majority of the meme coins that have come out over the last 7 or 8 years, there was no intrinsic value whatsoever. There was no purpose in these coins other than the developers just wanted to go make a lot of money. That was the true purpose behind the coin itself. Hey, you're welcome. Thanks for being on today, Dr. Darrell. Good to see you. So when it comes to purpose itself, that's one of the key things that you want to look for. Is you want to look for the underlying impact. Is this particular token moving the industry in some way forward? Not necessarily just the cryptocurrency industry, but it could be banking, it could be decentralized apps, it could be technology. But does this particular project serve a purpose and create some type of an impact? Or again, is it just some coin that's got a picture of an animal on it, and they're trying to drive, influencers to go out and pump it and promote it? So again, we're talking about Spark. The first is skip the hype. Second is purpose. The third is architects. I think it's very important that we, you look at the people that are behind the projects. Who's building it? What is their actual track record for success? We've assembled just an all-star team within our community. If you were to go over to t7x.io and just click on the About Us section, you'll see the team that we have put together. And it's an all-star team of individuals that are true icons in their particular specific areas. Barry Seaman, who was on CNBC for many, many years. If anybody that's in the world of investment banking knows who Barry Seaman is, he managed a $130 billion hedge fund. He's on our board of advisors. Andrew Scott, number 2 at Aegon. Pablo Penacolosa, he's our CEO, and he has, decades of experience literally doing mergers and acquisitions and buying and selling banks. These guys are titans at what they do, and they're experts when it comes to helping companies that want to tokenize structure properly, either filing a Reg A, filing a Reg D, filing a Reg S, and making sure that they're fully compliant with the SEC, which is a new global framework that's never been applied before until now. And that is really one of the secret sauces here at Trusted Smart Chain is we're raising the bar in the profession, and we're requiring those companies that are tokenizing to go down that path. And so I would ask you, who are the architects that are behind the project? If there's a project that it doesn't tell you who's behind it, absolutely turn and run away. There should be a track record. You should know exactly who's on the board of advisors, who's running the company, what's their track record of success. Another thing that I would look at is it the right timing, right? When did it launch? Where is the project at in its cycle? I'm a big fan of, I love to collect nodes. I get involved in projects in the early stages. I love the accumulation phase of a project. So I want you to think about Bitcoin in the early stages. Bitcoin, when it first came out, in the first year, if you were mining Bitcoin, now back in the day, mining, you had to go and buy actual hardware. So you might go buy like an ASICs miner. And if you were mining, they consumed a tremendous amount of electricity. They were very expensive, very loud, very noisy, ran hot. Nowadays, things have evolved from mining and using hardware to actually having software that's much more energy efficient. And you can actually take that software and you can host it in data centers and ensure that you're never going to have to worry about electricity going out, much more efficient. And you can do that for as little as a few dollars a month. So much easier process today. But I want you to think about, in the old days, mining in the first year. I think that we would all agree that if we had the opportunity and we wanted to go back, or we could go back to when Bitcoin was first launching, we'd probably leverage our house and sell everything that we own to get as many Bitcoin miners as possible. Why? Because we all know essentially what's happened. We know the rest of the story, as Paul Harvey used to say. For those of you that know who that is, I'm dating myself a little bit, but so I want you to think about this for a moment. In the accumulation phase of Bitcoin, today you have over 2 million people that are mining Bitcoin, but in those early days, there wasn't as many miners online. So you were able to accumulate a large amount of Bitcoin. Now, in that first year, you could have accumulated as much as, let's say, 700 Bitcoin with a Bitcoin miner. Now, that sounds pretty amazing, right? Bitcoin's sitting at what, $85,000 today. But here's the reality. The reality is this. Those 700 Bitcoin were only worth about $7 in year one. Just $7. So think about this. You go spend thousands of dollars to buy a machine. You mine all of these tokens or these coins. Bitcoin is a coin, and it's worth $7 after the first year. You're probably not that excited about it. But here's the cool thing. If you understand the concept of holding, they call it hodling in the cryptocurrency world. If you understand this concept of a utility and watching a coin that starts to gain momentum and demand, right? Because there is real world utility. There's a purpose for that project. All of a sudden, it starts to go up. And 4 years later, Bitcoin was worth 106,000, the same 700 Bitcoin. 4 years later, it was worth 55 million. 4 years later, same 700 Bitcoin, we're talking about $500 million. So what happened? Utility. The token itself had actual purpose. Intrinsic value. Today, Bitcoin is used for a place of stored value. You know, me personally, I actually would prefer to hold my currency, my US dollars. I don't hold in the bank. I'd rather have Bitcoin. Why? Because the last 3 years, Bitcoin or the US dollars lost 25% of its value. But the last 5 years, Bitcoin's gone up 1,300%. So I prefer to keep a large majority of any of my capital, so to speak, in cryptocurrency today. People look at Bitcoin as a place of stored value. So now you have true utility, purpose, and you have a growing demand. And whenever you have a growing demand with a diminishing supply, the end result is value, right? That's the benefactor of scarcity and demand is value. So the question that you want to always ask when you go into any project is, what is the purpose, not just of the project, but what is the purpose of the actual token itself? And I'm going to show you in a minute an example of this with the Trusted Smart Chain and the TSC token and the utility that we've created. So again, we're talking about Spark here when you're evaluating projects. And the first was skip, the hype. Second was what's the purpose, right? Third was architects, right timing. When did it launch? I think, again, I like to be involved in the early stages because I like to accumulate a large amount of the tokens when there's less people involved so that I can then enjoy the benefit of the utility and the demand, and over time, the potential growth of each one of those tokens, right? So the right timing. I think key infrastructure is critically important as well. I want you to hear this. Smart money always builds the roads before the rush. That's worth writing down. Smart money always builds the roads before the rush. What do I mean by that? So in this world of tokenization is exploding. What is tokenization? It means that companies are now utilizing this process to be able to raise capital, right? Instead of going public and running the risk of being shorted, going to private equity and potentially losing your company and the everything that you've built as a result of, they only care about one thing, which is just profitability. Tokenization is a much more streamlined, efficient approach to capital that removes all of the red tape. So it simply means that a company is fractionalizing ownership. They might take 20, 30, 40% of their company, they tokenize it, and they go to the open market. And now you can actually go and buy these cryptocurrency tokens and own a piece of whatever this company is or whatever the asset is. It could be artwork, it could be a real estate development, whatever the case might be. And for them, it gives them access to a global market of investors. And the investors, it gives them a seat at the table for the first time. Why? Because prior to this, anytime that there was a fundraise, typically it was limited to accredited investors. So now, for the first time, investors, the average everyday person, has the ability to be able to participate in these cap raises with these companies. Now, there's a lot of risk there because, again, this is where we're seeing misrepresentation, evaluation issues. regulatory uncertainty. That's been the challenges. And the reason why we built Trusted Smart Chain is to create a universal framework that addresses those challenges. And so, again, when we talk about infrastructure, I want you to imagine the superhighway of companies that are, 4 years ago, we're talking about a $2 billion industry. This year, it's projected to hit about $500 billion. Next year, or within the next 5 years, by 2030, it's projected to hit as little as 16 trillion and as much as $100 trillion. Think about that growth for a moment, just in the next 5 years. I had a mentor once that said, man, if you can figure out where people are going and get there faster, there's a lot of money that can be made. So I think about this from this perspective. There's a super highway that's coming, and you've got all of these businesses now that are moving in the direction of tokenization. So the logical thought process is, how can I participate in the infrastructure? How can I get involved in paving the roads and building the toll booths and ultimately creating the pathway forward for these businesses? And that is exactly what we've built with Trusted Smart Chain. And that is exactly what our node operators are participating in is they own the infrastructure, right? They're the ones that are out there paving the pavement. They're, bringing the electricity. They're doing all of the necessary functionalities that are necessary for all of these businesses to move in the direction of tokenization. So when you're evaluating a project, and we're talking about Spark, right? We've talked about skipping the hype, purpose, who are the architects behind it, the right timing, the key infrastructure. Those are the things that you want to look at. And one of the most important things that I learned from my mentor in this space, again, is don't chase the hype, don't chase the media. Look for opportunities to put your money in the infrastructure. Figure out where people are going, get there faster. And right now, we know where they're going. It's all about tokenization. So now let's break it down a little bit more here. And I want to talk a little bit about just utility, and I want to talk a little bit about how it applies in the project that we're currently building here at Trusted Smart Chain. And I think that's important. So with that, again, if you just joined us, welcome. It's good to have you on today. I'm testing out a new streaming platform that's new to me. So you got to bear with me a little bit as I figure out how to share and present and find some things here. So let's, there we go. I think I've got that from my computer here. I'm going to show you guys if I can. Oh, it's a little too big here. What's going on, Frank? Good to have you on today, buddy. Good to have you on, Bob. Thank you for being here. Boone, good to have you on as well. And I think I'm streaming, but I'm not sure, so we'll see. All right. It's always fun when you're getting on a new platform and testing some things out, so you guys got to bear with me a second here. I don't know if it's going to let me share my screen today or not. If not, we'll just kind of walk through it, but I want to see if I can get this up here. Present video file, image file. You know what? I know what I'll do. Let me go ahead and just take a screenshot of this file here, and then we'll pull it up. There we go. Let's see if this works. No, it doesn't want to work on it says my file is too big. I wonder why. Well, I may have to play with this a little bit. That was the purpose of today. Oh, there we go. I think we got it. All right. I got it up. All right. So we're going to talk about real world utility here for just a moment. Thank you for bearing with me as I learn this platform. So I want to show you the T7X and the Trusted Smart Chain ecosystem. And I want to share with you just how the Trusted Smart Chain is being utilized in a number of different ways to create demand for this particular token. And then I'm going to break it down, and we'll identify each area of utility. Because again, Utility is the key differentiator between a project that, they're relying on hype and hope and speculation to try and get some momentum and ultimately create demand, or you actually have true substance purpose, right? So let's talk a little bit about our platform. So first of all, we have a strategic partnership with T7X. T7X is a digital asset platform outside of the United States. It's a licensed exchange. There is no a license for an exchange in the United States, so it's referred to as a digital asset platform. It has the same licenses in 7 different continents that Coinbase, Crypto.com, the big boys have, Kraken, all of the other exchanges around the world. So the T7X digital asset platform has chosen the trusted smart chain to essentially help tokenize all of their real world assets. So they currently have 12 real world assets that are in process right now. They're at various different stages. The average valuation of these assets are approximately $50 million. These are existing businesses with cash flowing assets, and they are all in the process of either filing their Reg A or already have filed their Reg A, Reg D, and or their Reg S. Now, the team, what makes them so special is their expertise. The team, and again, you can go over to t7x.io and click on About Us, and you can read about the team and the board of advisors. But these guys collectively have taken hundreds of companies public. So they're experts when it comes to taking a company, looking at the operations, and then helping them structure it properly so that they can get through the Reg A, Reg D process, which is not easy. Guys, this is a 100-page filing. You have to have an independent audit up front. You have to have an audit every single year ongoing, and you have to be fully compliant as a registered investment with the SEC. Now, why is that important? Because 99% of the meme coin projects that are out there today couldn't get past an independent audit and evaluation up front, period. Because there is no, they're launching their token to go try to raise the capital so that they can maybe start a business. There is no business. There is no true valuation. And so that's why they're relying on hope and hype and speculation. So we're only working with existing businesses that are already cash flowing with tangible assets. And here's an example of a couple of the projects that are in process right now. Probably some of the first that you'll see that will be tokenizing. So you have our Tulum coin, which is luxury boutique hotels that are in Tulum. We have the Grow Estate token, which is a number of different facilities in the United States and Canada that work in the medical grade hemp facility. You have White Claw Crude, which is a very successful oil and gas operation that does over $1 billion per year. And so these are some of the tokens that are tokenizing. So T7X works directly with these different businesses to help them tokenize. Now, why would they want to tokenize? Because they want to raise capital, right? They're looking to raise capital for expansion purposes, to be able to continue to buy more land, to continue to expand on their operations. So they'll tokenize a percentage of their business. In some cases, it might be 30%. In some cases, it might be 49%. So when they tokenize, what happens is they actually will have their own token that is created and listed on the T7X digital asset platform. Now, why do they want to do that? Because that gives them access to a global market of investors. And they also have a team that can help them to be able to go through that process of filing a Reg A and filing a Reg D. Now, I do want to point out, they could go tokenize on any blockchain. They could go tokenize on Ethereum, Solana. There's many blockchains that are out there that specialize in tokenization. The challenge is that there is no standard, and anybody can essentially just plug in to these different blockchains and go launch a token, but there is no universal framework that is protecting the investor that leads to trust and transparency. And it was recently just said by the head of the crypto task force that was appointed by Donald Trump and his administration that a large majority of the meme coins that exist today do not have a place in the future with where regulation is going. And as early as July or August, we could see that regulation coming out. And we believe that pathway is the Reg A and the Reg D is right at the core of the pathway of where regulation is going, because what it does is it provides investor protection. That's why if a company is going public and they're doing a cap raise, they have to go file a Reg A and Reg D, because it forces the independent audit. It forces them to put their cash, their P&Ls out there for these investors to be able to look under the hood and to make a well-informed decision whether or not they want to participate in that cap raise. That hasn't been happening in the world of crypto. And that is the whole purpose behind Trusted Smart Chain. So you have the T7X platform, and they are working with these asset managers to help them get through the Reg A, Reg D filings. But here's what's important. You have to have a blockchain to build all of this. The blockchain is the superhighway. The blockchain is the infrastructure, right? So there has to be a blockchain that supports all of the transactions that are happening on that blockchain. Think about, what is a blockchain? A blockchain is a just decentralized network of computers or nodes that are supporting the overall transactions and the security and the infrastructure of all of these different coins and all of these different projects that are launching. So think about it from this perspective. You've got this superhighway of all of these different companies that are moving in the direction of tokenization. We know that that's exploding. So that's the Tulum coin up here that you see, the Grow Estate token, the White Claw Crude, right? These are all these companies that are tokenizing. They're looking for an experienced team that can help them to get through the Reg A, Reg D process, which is where our secret sauce comes from. The team that we've assembled has decades of experience in that particular sector, okay? So now, to be able to do that, remember, decentralized, what decentralized means is we've removed the banks. We've removed the centralized institutions. Think Bitcoin, right? Bitcoin 2009 comes out, and yes, Bitcoin was amazing, but the key innovation was the blockchain, right? The blockchain that made it all possible. So what is a blockchain made up of? Nodes, computer nodes, right? These nodes provide security to the network. They help facilitate the transactions on the blockchain, right? They help enforce the smart contracts for each one of these particular projects, because each one of these projects will have their own tokenomics, their own tokens, their own distribution schedule. So there has to be nodes to support that particular, all of these different projects. So that's where Trusted Smart Chain comes in. So the Tulum coin that you see here, the Grow Estate, the White Claw Crude, they're all being supported by the Trusted Smart Chain blockchain. What makes up that blockchain? Our nodes and our node operators. So that is what we are offering. That is what we sell, our TSC nodes. These nodes essentially support all of the activity and all of the real world assets that are coming onto the T7X digital platform. If you can understand that, and you can understand, remember today we talked about the importance of participating and getting involved in the infrastructure, right? You're paving the roads, you're laying the foundation for all of this to happen. Well, that's what a node operator is. That's what a node operator does. Now, in return for being a node operator, what do you earn? Daily digital rewards. Guess what? You earn Trusted Smart Chain tokens every day for the next 130 years. So think about that. For the next 130 years, you are earning TSE token, and those tokens, as the utility grows, which means as more and more of these coins come onto the chain, becomes more and more, there's a greater demand for those tokens. And again, what's the greatest benefactor of demand? Value. I want you to think and go back to Bitcoin in the early days. Bitcoin, 700 tokens was worth $7. 4 years later, 106,000. 4 years later, 55 million. Today, $500 million. Why? Because of demand. At the end of the day, that's really what it comes down to, is because of demand. So get me back up here. All right. I'm learning. I'm getting better at this. So I'm going to show you guys one more slide here today to really hammer home the importance of utility. And I'm going to use, again, the Trusted Smart Chain project as an example of how we are creating this utility. And that's really what separates us. And so if you look at Trusted Smart Chain, there's a few unique differentiators. Number one, it's the team that's been assembled. Go over to t7x.io, click on About Us, and you can read about the different advisors that we have, the members that are involved. There's dozens of individuals that have just some of the most impressive backgrounds when it comes to finance, and their knowledge and ability to be able to structure these projects properly so that they can get through the regulation that's coming, right? So that's important. But the second is the utility. And I think that is what makes us special. And I want to show you and break down what that utility actually looks like, line item by line item here. So let's see if that comes up. Here we go. I'm getting the hang of this, Frank. I'm getting better. All right. So let's break this down here for a moment. So right at the top here, you have RWA distribution paid in TSC token. So what does that mean? So I want you to think about this from this perspective. So our goal is to have 100 real world assets on our chain within 3 years. We already have 12 that are in process. Year 2, the goal is 30 to 40. By year 3, we will have over 100 real world assets that are in process. That's the goal. So you take 100 real world asset projects, and here's what happens. When these guys get through their Reg A and Reg D, they have 12 months to go raise capital. And so there's a real world asset manager that's in charge of that. And anybody that wants to invest with them will work directly with the real world assets. We don't get involved in that. We're not marketing and selling in the real world assets. Remember, we're just the foundation. We're just the bricklayers. We're laying the foundation, and we're earning daily digital rewards, right? What creates the potential growth of those rewards is the demand, right? So as more and more real world assets come on chain, here's what happens. Where does that demand come from? So think about it from this perspective. Every one of those real world assets has a year to do their cap raise, and they pay on average about 10% dividends to the people that choose to invest with them during the cap raise. So each company on average is worth about 50 million. That's kind of our target minimum. So if you take that 50 million, and what is 10%? 5 million, right? So you're paying out 5 million in distributions. If you invested $100,000, let's say, into the Grow Estate token, and they were paying 10% dividends, you would receive $10,000 a year, $2,500 a quarter, right? Because you chose to participate. So not only would you hold the tokens because you bought $100,000 worth of tokens, but because you're participating during the cap raise and you chose to get involved at that period of time, they're offering a 10% distribution, you're going to make $10,000, right? Until you choose to sell those tokens. So take 100 real world asset projects that are each paying an average of about 5 million a year. That's $500 million in annual demand for the TSC token. Why? Because all of those real world assets, when they go to pay their distributions, they go to the T7X digital platform, they take their US dollars, and they go buy TSC token. Why? Because they're heavily incentivized to do that. And then they go and pay their investors their distributions in the form of the TSC token. So what does that do? It increases demand. Now we're going to talk about why that's so important here in just a second, but it increases demand. Okay, so that's first. Second, you have your node license. That's $500,000 in yearly demand for the TSC token. Now you also have node license discounts. So we have 200,000 node operators that we will be bringing onto the Trusted Smart Chain. My belief is we will sell out on those this year. We've sold about 15,000 of them so far. So think about this. We are within 30 to 60 days, let's say 60 days of the token being listed on the first exchange. And then you'll start to see it get listed on other exchanges or platforms as well. So typically what happens is a blockchain genesis happens, which means the first block is created. And it usually takes about 60 to 90 days from the time that the distributions start. Once the block is created, the node operators start earning their daily digital rewards. Now, it takes about 60 to 90 days to see that token actually get listed. When it's listed, it now has a true value, which means you can sell your tokens every day. You can swap them for other projects. If you wanted to swap them, your TSC tokens for Bitcoin or Ethereum, you could do that, or USDT or USDC, or you can hold them. You can hold them because you believe that there is tremendous upside potential. Why would you believe that? Because of the demand that is going to be created for that Trusted Smart Chain token that you're holding. So think about it from this perspective. We have 200,000 licenses, 185,000 left. Now, we are going to, as soon as it's listed, we're going to offer a 10% discount for anybody that buys their nodes with TSC token. So let's say you want to go buy some nodes. You want to go buy 5 nodes. And instead of paying with a wire or your debit card or credit card or whatever the case might be, you go to the T7X digital platform, you open up an account there, and you buy Trusted Smart Chain token. And then you go through the process of buying the nodes. And when it comes time to pay, you pay with the TSC token. You receive a 10% discount. Well, I think a lot of people are probably going to do that simply because they want that discount. So let's say that out of the 185,000 nodes that are available still, let's say 100,000 of them decide to do that. They go through that process of buying TSC token. Well, that's an additional 500 million in TSC utility demand that is happening. That means US dollars are going and buying up TSC token. Let me ask you guys a question. If there's more buying than selling, what happens typically to price? Goes up, right? There's more selling than buying. What happens? Price goes down. Think about Bitcoin. You know, people got worried, tariffs, this, that. The fear index starts to rise. People start selling. What happens to the price of Bitcoin? It comes down. What happens when all of a sudden there's more confidence and there's good news and interest rates start to drop and, you know, there's good news about, you know, China is maybe coming around on the tariffs and all of a sudden what happens? Confidence starts to go up. People start buying. What happens to the price of Bitcoin? The demand grows for it. What happens? Price goes up. So you've got now people buying TSC token because they want that discount. Now let's keep going. Have you ever heard the term gas fees before? If you've ever operated like Binance, for example, if you've ever been on Binance and you go try to go complete a transaction, or you operate with any project that's built on Binance, you have to have what's called BEP20. It's their native token to pay for the transaction fees, gas fees. Sometimes it's frustrating because you're like, why won't this go through? And you realize, oh, this project was built on Binance, right? Well, all of our projects are built on the Trusted Smart Chain. Same concept. So all of the transactions that happen on the T7X digital platform, which has access to a global market of investors in 7 different continents around the world, all of those transactions require TSC token to complete those transactions. So again, the token that you're holding, there's a demand for it, right? And as the T7X digital platform is more and more successful, the demand for that token goes up. Now, this is perhaps one of the most exciting ones. Here, and again, we're talking about what is the utility of the TSC token. Why is utility important? Because if there is no utility, you've got a project that's based on hype and speculation. And this is one of the keys when it comes to looking at and evaluating successful projects. So the last one is every single token that comes onto the T7X digital platform is paired to the TSC token. So what does that mean? So let me give you a hypothetical example. Let's say that you wanted to go buy 1 Bitcoin. Today's price is probably right at around $85,000. So you are holding right now the equivalent in USDC, which is a stable coin. Okay. So you're holding about $85,000 in USDC. And you're on the T7X digital platform and you want to buy Bitcoin. You first have to swap your USDC for TSC, Trusted Smart Chain token. Okay, so you're taking the USDC and you're buying $85,000 of Trusted Smart Chain. And then you use that Trusted Smart Chain to buy your Bitcoin. Well, guess what? The seller of that Bitcoin, because remember, when you're buying, somebody's selling. That's how exchanges work, right? So the seller now holds TSC instead of USDC. So now they're holding USDC. So guys, if you can understand this, and I'm going to show you this last slide here, so that this will kind of drive this point home, because I think that this will help those of you that are trying to really understand our project and what makes us so unique and why we quickly become one of the top blockchain projects of 2025. We modeled our tokenomics after Bitcoin. Why? Because it's the same exact, it's a project that people trust, people know, they understand, they are aware of the tokenomics and how they work in most cases. So let me just show you why all of this matters. All right, so we'll go here. All right. So why does all this matter? If you look at Bitcoin and you look at the tokenomics and you understand why Bitcoin is at $85,000, it comes down to two key areas: demand and scarcity. With Bitcoin, there's only 21 million tokens that will ever be minted. That's it. There's not a finite supply like the US dollar, right? US dollar, they just keep printing. What happens to the value of your dollar? It just goes down. So there's only 21 million Bitcoin. And in the same respect, there's only 21 million trusted smart chain tokens that will ever be minted. Okay. Now, in the first 4 years of Bitcoin, 10.6 million Bitcoin were distributed. To who? The node operators, the miners, the people that were providing the security and the infrastructure for the Bitcoin blockchain. Now, what happens after 4 years? There's a halving event. What does that mean? It means that the next 4 years, the amount of tokens that are going to be minted are now going to be cut in half. So now the next 4 years, there's only going to be 5.3 million tokens that are distributed. Now there's going to be another halving event after that. So then 4 years goes by, there's another halving event. So what happens now? Well, now instead of 5.3 million, now you're at 6.2 million, 650,000, right? So every 4 years, the amount of Bitcoin that is being distributed is being cut in half. Can anybody tell me what's happened, historically speaking, since 2009, every 4 years when there was a Bitcoin halving? What happened to the value of Bitcoin? That's right, Bob. It shot through the roof after every single halving. Why? Because when you have a growing demand and a diminishing supply, what happens? I'll give you an example. I lived here in Arizona during COVID, and there were these there were very strict lockdowns happening in California. I think they were crazy, but crazy lockdowns. So you had a lot of people that were moving to Arizona. So what that did is it took our housing market, and there was hardly any homes on the market because there was such a demand for them. Do you realize that people were paying $100,000, $200,000 over asking price? And there were bidding wars for those homes because there was such a demand. There were 10 backup offers on some homes. Why? Because there was a little supply and a huge demand. So we did the same thing. Our project has the exact same tokenomics as Bitcoin. Now, I want you to think about this for a moment. In the first 4 years, if there's 10.6 million trusted smart chain tokens that are distributed in the first 4 years, and a large majority of the people, you guys as node operators, are holding them. So there's not that many people selling out there. But if we go back to the first slide, right, we come back to here and we say, okay, well, if there's a lot of people that are holding these tokens and there's a huge demand for these tokens. Why is there a huge demand? For all of the reasons that we talked about, right? These reasons here. You've got your RWAs that are paying out their distributions to their investors. You've got node operators that are trying to buy trusted smart chain so they can get a discount. You've got people that are operating on the T7X digital platform that need it to be able to transact and to trade and to be able to swap and do what they do because it's a digital platform. People are buying Ethereum, Bitcoin, all kinds of other coins, not just trusted smart chain. And then you have every single one of those tokens that's paired to the TSC token. What that creates is utility and demand. Guys, if there's 100 companies in 3 years and there's only 10.6 million tokens in distribution, it's just simple math. And a lot of them aren't available because you have a community that is incentivized to hold. And we're doing that in a number of different ways. We have a staking opportunity that's available where somebody can stake their tokens for a year, and you can earn additional tokens with the tokens that you're holding because you're willing to stake them to support the overall network. And you have a large majority of the community that is holding. Why? Because they understand that in 4 years and in 8 years, we could potentially be one of the most powerful blockchains in the world. And every time a real world asset comes on chain, it creates more demand for the tokens that you're holding. Again, why is Bitcoin worth $85,000 today? Because of the demand and the diminishing supply. And at the heart of it all is this superhighway that is supported by nodes and node operators that's over here paving this superhighway for the trillions of dollars of companies that are getting ready to move down that path towards tokenization. Guys, if you can understand that, if you can get that and understand, and I know that's a lot, and if you're catching this and hearing this for the first time, you're probably like, I maybe caught 10% of it. It's like drinking out of a fire hose. But at the end of the day, we started this off by talking about how do you evaluate a solid cryptocurrency project? It comes down to a few key areas. Timing, who's behind the project, does it have real world utility, which is what we just spent the last 30 minutes talking about, who's behind the project, and do you have a chance to participate in the infrastructure, the foundation of where the industry is going. And that, my friends, is why Trusted Smart Chain. That's why our nodes are in such high demand right now. So anyhow, I appreciate you guys being with me today. I kind of threw this together on a whim and just wanted to practice this platform because I'm going to be using it a little bit more. And hope you got some value out of today. Once again, I want to end with where I started today, which is I want to wish everybody a happy Good Friday. Today is a very, very important and very special day. Whether you're a believer, whether you're a non-believer, I think that today is a powerful reminder of sacrifice, purpose, grace, and again, whether you observe it spiritually or not, it's a day that invites reflection, renewal. It's a moment to slow down and express gratitude and stay grounded in what truly matters, which to me, again, is faith, family, and being a part of something bigger than ourselves. So appreciate you guys tuning in today. We'll be doing a lot more of these in the future. So we'll see you guys soon. Take care and happy Friday. Happy Easter weekend.